Hi, my name is Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand Forex, gold, and S&P fundamental and technical analysis for the week ahead, starting the 18th of March. Hope you all had a great trading week, and let's get into the week ahead. And according to Trading Economics in the United States, investors will focus on the Federal Reserve's interest rate decision, which comes along with economic and dot plot interest rate projections. Key US data include retail sales, industrial production, and housing market indicators, including housing starts, building permits, and existing home sales. Globally, interest rate decisions are expected from Japan, China, the UK, and Switzerland. Inflation data will be released for Canada and Japan. In Europe, the UK's unemployment rate and GfK consumer confidence, Germany's ZEW economic sentiment, and euro area consumer confidence will be closely watched. Meanwhile, New Zealand's GDP growth rate and Canada's retail sales will also be in focus. So lots really going on this week across the currency world. So getting into the US dollar, and this is the US dollar equally weighted index, and it's really the dollar equally weighted against the euro, the pound, the yen, CAD, Australian dollar, New Zealand dollar, and Swiss franc. And so looking at the dollar's performance last week, pretty much flat, right? Basically just auctioning, going sideways, ranging, however you want to describe it. I think the market is waiting for, I guess, a catalyst. The main narrative at the moment is, of course, tariffs, and tariffs will weigh on a central bank's thinking, because tariffs could produce inflation, and also as well tariffs can cause economic contraction as well. So central bank will be closely watching what is happening, and the Federal Reserve at the moment, let's go to the US channel. It says here, last week, cooler than forecast February inflation pushed stocks higher after 2 days of heavy losses, and knee-jerk reaction in bonds quickly reversed, and yields rose across the curve amid concerns over an escalating trade war. While the surprise slowdown in consumer prices brought a degree of relief to traders, several voices on Wall Street saw the data as the calm before the storm, given the uncertainties around the potential impacts of tariffs on the economy. So again, I think the market is really a bit jittery. Of course, the effects of tariffs are yet to really kind of take place and show in the data. So again, the main fears are GDP, and of course, if the contraction side of things and tariffs cause contractions, then of course that could basically lead the US into a recession, or at the same time, I should say, tariffs are inflationary, meaning that the price of maybe goods and services tend to go higher. So what that is basically a situation where it's called stagflation, and stagflation is rising inflation and contracting economies. So I do think at the moment, the dollar, you can look for buys or sells at the moment, but if you're looking for a sell trade, I would probably say you'd need to really wait for a pullback before looking at going short. If you're looking for buys on the dollar, of course, now would be the time to look for buys from a price perspective. Again, for me, my bias is that you can look for buys or sells on the dollar at the moment. It can go either way. Of course, they are expected to hold rates, which typically does support a currency. The central bank aren't actively trying to weaken the currency, but again, everything is really being driven by the development of Donald Trump's policies and tariffs. So at the moment, I'm actually long on the dollar on one currency at the moment, and I will get into that later on this week. So I entered into a dollar Swiss trade, and also I'm currently in a pound dollar trade. Dollar yen. So the dollar yen at the moment, again, not really a pair that I'm interested in, but it for me, I guess the reason why is because the yen is also in my book a buy, and so when there are two currencies that you could potentially look to buy, really what you want to do is look for the biggest divergences. So a currency that's definitely a sell and a currency that's definitely a buy. At the moment, the dollar is again middle of the road. You could obviously look for sells if you want to. The yen for me is more of a buy because it's really the only major central bank that are looking to hike rates. So, and the data is kind of supporting them hiking rates, and so you can look for some short trades if prices pull up into that supply zone right here, or if you are quite bullish on the dollar, maybe there's some good news. Then looking for a pullback into this demand zone, the 147 round number, or just below that could be a decent area to look for a buy trade. But ultimately, I'm not too keen on this pair at all. Dollar Swiss. Now, I won't get into my trade, but I was long on this. I ended up exiting for a small win. One position was a full win, and then the second position was basically a break-even trade. But ultimately, I do think that fundamentally the dollar is stronger than the Swiss franc. The Swiss franc, they're heading towards deflation at the moment, negative interest, negative inflation potentially. Their economy isn't doing great, and so I think that there was the potential for a buy. So I ended up taking a buy around here. Exited the trade mainly because of the inflation data for the dollar, which I thought would have likely have been a bit negative, but it turns out it really wasn't at this point. So any pullbacks I do think could be buying opportunities, but providing, of course, the dollar is supported from a data perspective. That would be my play to more of the upside rather than downside potential. Dollar CAD, again, dollar CAD, I'm more bullish on the dollar at this moment in time than the Canadian dollar. There was, this week, really, over the last 5 days, there hasn't really been any, there's been a lack of volatility, I would say. You can see it kind of here, the last 5 days, 1, 2, 3, 4, 5. Prices have really just the low and the high, which is 168 pips. Now, if you're obviously a day trader who's looking to kind of scalp and get, 10, 15, 20 pips here, that's fine. But for higher time frame traders like myself, you need a bit more volatility in order to make a bit of money. So, um, I do feel that the path of these resistance should still be more to the downside. Sorry, to the upside, and looking for a pullback really into any kind of demand zone. I think this is actually area, this 143 to 142.50 is actually a decent area to look for some long trades, again providing that the data supports dollar buys. And I think in the trade war it does seem like the US has the upper hand in terms of negotiations, and the Canadian government may have to kind of bend or bow to Donald Trump, but I could be wrong on that. Pound dollar, for me, I am in this trade. So the reason I entered this trade, and it's a smaller than usual position, is really because the UK, I do think the UK may, come April, I don't think the budget may promote growth in the UK. In fact, I think it may hinder a lot of businesses and consumer spending power. That is obviously yet to be seen, but in January, the main news for the last week was that the UK economy unexpectedly shrank at the start of 2025, piling fresh pressure on Prime Minister Keir Starmer. Starmer's government over the lack of momentum since Labour returned to power last summer. The weakness in January was partly driven by the UK being hit by the strongest storm for 10 years, suggesting some sectors could rebound in February. While economists are predicting a return to steady growth this year, risks to the outlook are mounting, with Donald Trump's escalating trade war sending stocks crashing and triggering fears of a global downturn. The hope is that Britain's plans for big spending on infrastructure will underpin growth. growth. Following the lackluster performance in the second half of 2024, growth remains fragile due to global and domestic uncertainty, said Haley Lowe, economist at the National Institute of Economic and Social Research. It is crucial that the upcoming spring statement provides stability rather than adding to domestic uncertainty. And I think that the spring statement and the fiscal policies are going to add to domestic uncertainty. And again, I could be wrong, but I'm placing a bit of an early bet on that. So trying to getting short on the pound dollar. If it does go higher, if prices do go higher, but I still feel that the UK isn't best placed, then I will continue to look for some short trades. Or, of course, if the dollar, starts, data starts to show bigger cracks in the economy, then of course I will just exit the trade. Not every single trade idea is going to work out, but I'm starting to just scale in, in a small perspective, because I think the downside potential actually is decent. And when you get this kind of parabolic move to the upside, normally you get some sort of pullback. So let's see what happens with this. With this area here. But of course, if you're looking for a buy trade, then of course you could look for, one second, let me just move this up to about here. You can look for a demand zone if you're bearish on the dollar, bullish on the pound, looking for a buy trade here. I still think here is a little bit on the high side, but that would be the first area to look for buys before looking for an area down at these lows. Looking at the pound yen, and the pound yen, again, I think it's going to be one of the trades I'm looking to take. If I'm looking to sell the pound, which I am, I do think I'm slightly early, but who knows? I could be had the right timing. But I'm looking for really a level here, which is a stop hunt level. And if prices do stop hunt, then I'm looking for a trade to the downside. Again, really buying the yen and maybe selling the pound based on maybe some negative sentiment and negative data. If you are looking for buy trades on the pound, it does look a bit messy, to be fair. That would be really what you would call the demand zone. But I would say from a value perspective, we are between that high and that low. And what you want to do is probably look for more of a trade that is below fair value, right? So 50% between an expensive area and a bargain area, right, would be fair value. So you're looking for, if anything, a trade. If you're looking for a trade on this pair to go long, it'd probably have to start from there. And then what you would also do is just look for support and resistance levels. For me, there's definitely support and resistance here. On the daily, you've got resistance, support, support. So pull back into maybe the 88.50s, 88.40s would be a decent area to look for a long trade. You can also look for another area of support and resistance right there as well, where you can see some support there, resistance along there, bit of support here as well. So again, it lines up more with that 50% fair value, and then obviously looking at discounts. That's if you're looking to buy the pound versus the yen. Looking at the euro index now, the euro index. The euro, you can find reasons to buy. Recent sentiment out of the euro is that, of course, Germany, Merz reaches deal with Greens on German spending package. So German Conservative leader Friedrich Merz reached an agreement with the Green Party on a debt-funded spending package for defence and infrastructure, overcoming a key hurdle ahead of a crunch vote in Parliament next week. Germany is back, Merz, who aims to succeed Chancellor Olaf Scholz in the coming weeks, told reporters in Berlin on Friday after the meeting with lawmakers. So the agreement spelled out that infrastructure spending or infrastructure funding would be earmarked for new projects, and that 100 billion euros will be channeled through the government's existing climate and transformation fund. Meeting green demand, it would also be extended to 12 years instead of the planned 10. So it's looking positive for the deal for fiscal spending for the euro, which is really actually supposed to drive the European economy, or the German economy, of course, and then Germany being the eurozone's biggest economy. A rising tide lifts all boats, right? So if you're looking for a buy trade on the euro, of course, this is again the euro index, you're looking for a bit more of a pullback into a demand zone, or if prices make new highs, then a pullback into that would be the new demand zone, right? But at the moment, that hasn't happened. So if you're waiting for a buy on the euro, maybe you want to look for a pullback into the this demand zone. Now, also as well, there again, the data needs to support buys, right? So there is data that at the moment isn't necessarily helpful to euro buyers, and it says here that ECB's wage tracker indicates steep slowdown likely this year. The European Central Bank indicator for future pay growth continued to signal a sharp slowdown in 2025, backing further retreat in inflation that may allow more interest rate cuts. So wages are seen as inflationary and or a component of inflation. So when wages start to come down, it adds to inflation coming down, which then means if inflation is coming down, then in fact central banks may need to cut a little bit more. So let's see what happens. It says here the central bank lowered borrowing costs this month for the sixth time since June, as inflation abates and the economy wobbles. But while it signaled a continued bias toward more reductions, it suggested that the easing phase may be nearing an end. So markets have paired bets on rate cuts this year after European countries revealed plans to significantly increase defense outlays, with Germany also unveiling large-scale investments into infrastructure. Traders no longer fully priced two more quarter point decreases in the ECB's deposit rate, which currently stands at 2.5%. So yeah, it's a bit of a mixed bag with the euro, but probably more leaning towards more positivity. So again, price coming down means that potential for the euro to be a bit more of a bargain if you want to look for a buy trade. And how that affects the euro dollar is if the euro does pull back a little bit this week, of course, euro index, then of course, anyone who's in any short trades up here is obviously going to benefit. But also as well, from a buy trade perspective, that demand zone there, if you're looking for the euro to be a bit more of a bargain and a bit more of a buy, then of course you're looking at buys around that 108 107 sixes, right, within that zone. So again, euro dollar you could definitely look for buys, definitely look for sells. It's a bit mixed at the moment fundamentally. We had a great run on the euro dollar, short in, last year. And now, of course, fundamentals have changed, and so is price action, right? And so again, you look for buys or sells. If you want to trade this pair, you don't necessarily have to. I haven't got the biggest conviction on this. In fact, if I'm taking this trade, I'm looking to take really kind of say smaller positions than normal, not necessarily a high conviction trade. Looking at the euro yen, and the euro yen I was interested in until, of course, the euro started gaining strength. For me, this isn't really a pair I'm looking to trade or interested in. I think there are better trades to buy or sell the yen against, or buy the yen. So yeah, I think that if you are looking for a buy trade, right, and buying the euro against the yen, then you're looking at a pullback into that zone. If you're looking for a buy trade on the yen, then actually right now would be a decent chance to look for a sell trade. But again, I don't know whether the euro is the best short against the yen at the moment. So I'm staying out of this trade. I'd rather not take that. Euro pound. So euro pound again, a bit middle of the road. They're both kind of competing in terms of the fundamental side of things and rate cuts or lack of rate cuts. So the euro pound not really a pair I'm interested in, but if you are, then you're looking at maybe a bit more of a pullback into the zone. If you miss this area here, you're looking for a pullback into that zone before looking at short trades. If it does create higher highs, then this actually becomes a stronger area of demand, right? And then you're waiting for basically a pullback into the zone before looking at going long. But again, not really a pair I'm interested in. Aussie dollar, so Aussie dollar again, very tight auction, tight range this week. Prices have only really gone from that high to that low. You're looking at about 72 pips. So volatility's kind of dried up a little bit last week, but we could see return of volatility come with the announcements this week. So if you are looking for a short trade, meaning you're buying the dollar in a more of a risk off environment, then you're looking at short trade, that area. If you are looking for a long trade, then I think basically a pullback down into this area here. Now, again, what I would say is before uh, looking to buy the Australian dollar, just make sure that or the Australian dollar against the US dollar, just ensure that the VIX is, below 20, as that would indicate a bit more risk on in terms of sentiment, right? But let's see what happens. Again, not really a pair I'm interested in, but technically I do think this is actually a really nice short up here. But let's see. Moving on to gold making new all-time highs, past that 3,000 an ounce, $3,000 an ounce barrier mark. Again, I do think that the path of these resistance is still really to the upside. There was a nice opportunity to get long here. Prices have made new highs, and so now it's really just an opportunity to try and buy gold either at this demand zone or slightly lower for a better price. This is looking like a much better price now to look to look to buy gold at the 2,860 to 2,840 levels. Now again, who knows whether risk on starts to come back into the market. If risk on starts to come back into the market, maybe due to the Russia-Ukraine ceasefire and maybe some sort of peace deal, that can also alleviate fears. So we could actually see a top in gold, but let's see. Again, the data would have to support that. The S&P, we did cut through demand zones and as well as support and resistance zones. And as I always say, there's no technical analysis level that's going to stand in the way of sentiment or strong sentiment or fundamentals, right? So got to get the fundamentals right before looking at because that will determine overall direction, right? So at the moment, I do think that we've had a 10% drop, right, from this high to this low. Now, while that might seem a massive drop, right, 10% really isn't when you consider the fact that you haven't really had major drops or major pullbacks in the for the S&P for a while, and every pullback has been maybe something like 6% there. Around here was about 10% as well, so that was about a 10.19%, 10.29% drop. Seemed like a massive drop at the time, but now look at it. Whoever's buying that low, this is a 4%. Right, pullback here was around 5%, so 10% is just within the realm of what's been pulling back anyway. Again, I would say the path of least resistance over the medium to long term should really be to the upside. The S&P and stock markets in general, when a central bank is on a cutting cycle, typically during that cycle, the stock markets can move to the upside. Now, of course, from a risk off perspective, then of course you're going to get a bit more pullbacks. But once risk off gets priced in, then this could look like actually a really nice buy. So needed to pull back just a little bit more in order to get interested in this. Or if prices do make make a bit of a high, then that would create a demand zone. Then you're looking at a pullback into that area before looking at going long. So my bias is always really to the upside. it's just a case of waiting for the fear to kind of dissipate. Maybe the like I said, the VIX to maybe go below that 20 and use that as some extra confluence to look for buy trades on the S&P. Again, I can't tell you what to do. Many traders will be looking for short trades, and if you are looking for short trades, then you're looking at a short trade. That's going to be the earliest one, supply zone there. So that actually lines up quite nicely with a nice support and resistance level here. Got resistance, support, resistance, support, support. So quite nice there for the S&P. So that brings us to the end of the analysis. Getting into the my trades and the new trades that I took this week. One of them was the Aussie Swiss. Now, you might be thinking, why the Aussie Swiss? Australian dollar for me fundamentally is better than the Swiss franc. Of course, risk sentiment was weighing on the Australian dollar. Now, I managed to get involved in this trade. Intraday, my entry was, in fact, sorry, it was, where was it now? It was here. That's it. It was there. It was right there. My stop loss was about 15 pips below. I ended up getting stop hunted, which was a bit annoying. And then I didn't actually get back into this trade, and I really should have got back into the trade. I was waiting for a bit more of a pullback after prices had made a bit more highs, but just didn't manage to pull back and get the entry that I really wanted to see in order for me to get involved in this stop hunt. So, but I know there were traders that did get involved in this and are making money in the group. I made money off this trade, so well done to them. I did get stopped out on 1, 2, 3 positions. Again, they were smaller positions than I normally take because of the risk off sentiment. But yeah, 3 positions on that were losses. So, but the direction was right. It was just the timing and the fact that the stop loss was just a little bit too tight. And that was, what happened. But I had a feeling that this area was a decent buy, and by the end of the week, it turned out to be the right choice. So the analysis was correct. Just the technical side of things and the risk management in terms of the placement of the stop loss was slightly too tight. The dollar Swiss. So with the dollar Swiss, I managed to get involved in this trade, and my entry was right there. Actually, it was right here. And then I managed to get involved actually in 2 positions. So when prices pulled back into, oh, matter of fact, let me just zoom out a little bit just to show you the context. So, this is a demand zone. There was a demand zone right here. Right, demand. Again, I wanted to be a buyer from a fundamental perspective of the out of the 2. Prices basically came down on the daily, zoomed down into the lower time frames. My entry was actually here. Prices pulled back, so I ended up entering into 2 positions as I had a buy pending order, buy limit order right there. And then I ended up getting a 1-to-1 on that trade as prices moved to the upside. And then as I was in this trade on I think it was the Wednesday. Yeah, it was the Wednesday. Data came out, and obviously it wasn't great for inflation, right? So inflation was coming down across the board. So I decided to exit the trade, and I exited somewhere around here. So it was basically a break-even trade on that second position. The market order that I originally entered at is about a break-even trade. Although prices went higher, traders might have said, well, why did you exit the trade? Because prices went higher. Now, when you get data that comes out that goes against your trade, then the smart thing to do is just to exit the trade. Okay, if prices went higher, we weren't to know that. So it would have been better me just exit the trade based on data that didn't support my my overall bias, because if I didn't exit the trade and then prices ended up, falling, for example, right, and ended up going all the way down here, and I got stopped out for a bigger loss, then, you could ask and argue, well, why didn't you just exit the trade, right? Because the data was against you. Why are you holding on to the trade? So, the smart thing to do was to just exit the trade, right? And you can always get back in on a new trade. I'm risk averse, so I'm not necessarily one of those people. I haven't got the mindset where I'm trying to, um, make as much money in a short amount of time as possible, right? I'm being consistent, and cut your losses when you feel that the data isn't going in your favor. It doesn't mean that all data. It just means that major data, and major data CPI is one of the things that I definitely look at. And so when CPI goes against you, because it really influences the central bank's thinking on what they should do in terms of hikes, holds, and cuts. And so for me, it was the right thing to do. So yeah, one win and one break-even trade. And then the pound dollar. So we did the analysis. Basically, this was in a supply zone. And then I've entered here. Now, prices did pull back a little bit. Didn't quite trigger me into a second position, which was, it's always a little bit annoying, I guess. But that wouldn't have been a profitable trade. Oh, actually, no, sorry, it would have been a profitable trade, because of the fact that if it did trigger me in, then I would have got a 1-to-1, and then I would, the worst case scenario would be I would be at break even, because I'd be in one trade with a 1-to-1 on another trade. So one win, one open position. So yeah, it did pull back, didn't quite fill me on that 50% area. And so I'm only in really on one trade at the moment. And hopefully we can get a bit more downside potential on this pound dollar. I'm hoping this week that there is again um, some bullishness out of the Fed, some hawkishness out of the Fed, and at the same time maybe some dovishness out of the pound. And so let's see what happens in and around this area on the pound dollar. But those are the trades that I took this week. I'm only in the pound dollar. Of course, the dollar Swiss I'm not in, and the Aussie Swiss I am no longer in. So that was my trading for this week. All right. Hope you have you enjoyed the analysis. Take care, and I'll speak to you all soon.